Shut up and sit down.
All right, everybody, welcome back to Rebel Trading Group Podcast, episode 23. Today's date is June 8th, 2018. It's a Friday, baby. My name is Nathan Oliphant, and with me, as always, is the gluten-free Jason Bessing.
The gluten-free
I think we should
Jason
bring back,
Bessing. What is going on,
I think
bro?
we should bring back gladiator fighting, and I would go just for the announcements of the gladiators. It would have to be epic.
I wonder what the hell. Yeah, okay, the lion is biting him. Okay, he seems to be holding it off.
Do you think there would be gambling?
I guarantee you there was gambling. I bet you there was manipulation and fraud and shit. I mean, you're talking about the Roman fucking Empire. You gonna tell me that's not some sketchy shit?
So we are 3 minutes from closing bell right now.
We are closing bell. I will get you those numbers in just
Have
a
the
few minutes.
Bell ringing soon. We're gonna have Jason ring his bell. He's got a bell, right?
I have a bell on my mouth.
Ding,
Giggity.
ding, ding, ding.
Anyway, so anything going on today? Anything
I
like
didn't
there's
really
not a
check
lot.
the news.
Trump talked a lot today,
Did he?
and yeah, it was the implied open. It was before the market, but as the
Oh yeah, there's a bunch of G7 talk stuff.
yeah, they're doing the G7 thing, and then
A bunch of
but dude,
invitations.
he was kind of relentless with these reporters. He's like, you're not even prepared. These people come here, they're not even prepared. Okay, you what? I can't hear a word this guy's saying. I
That's
can't
a
hear a
classic
word he's
Trump.
saying. You
Shut down
next.
the media.
Just fuck him.
Shut
He
down
hates
the
them.
media.
He hates them.
Fuck it.
The less he gives them, the less, and then he can make it look like it's their fault.
Yeah, it's
I
First
love it.
Amendment freedom turnaround, slippery slope, baby. Here we go.
I love it. But anyway, yeah.
Let's.
Let's go ahead. Let's go ahead and get rolling. Today's market vocab.
Ooh,
You ready?
ooh. I guess vocab was my least favorite subject.
What? Oh no, dude, I loved vocab. Vocab and spelling, dude, I rocked that shit in like third grade, bro.
Nerd.
Dude, I was like, I didn't even have to study. I was just acing that shit. Jason was acing. That was back when I was not gluten free. Anyway, today's word is cost basis. What is a cost basis? Hit me with it,
Cost
Nathan.
basis. Okay, so I guess that's your. That's like the price that you entered at. Um, and I guess that would change depending on if you bought more. It would be an average price.
It's the average cost of the stocks that you've purchased. So, for example, let's go ahead and go with good old fashioned Ford. Let's say, you know what? I'm going to give her credit. Let's say she's at $12. Whoop whoop.
Bing, bing,
She hit.
bing, bing, bing,
She
bing,
hit.
bing,
Oh,
bing, bing,
yeah.
bing,
Bell
bing,
just
bing,
closed.
bing,
Bell
bing,
just
bing.
closed. Bell just closed. Bell just closed. I'm gonna get you the numbers in a second. But just to finish my point, let's just say Ford hits $12. So you decide to purchase 100 shares. Your cost basis is $12 because your average cost was $12 per share. So that is your cost average, your average cost, or your cost basis, most commonly put. And you can lower or raise your cost basis depending on how much stock you purchase. So if Ford were to take a dip to 11 and you decided to purchase another 100 shares, your new cost basis is going to be $11.50 because you purchased 100 at 12 and 100 at 11. The middle there, the average cost is $11.50. That's a very simply way to put it. And I do a lot of trading by adjusting that cost basis and waiting for those pops. That's spread trading. But yeah, cost basis, very simply put, very important thing to know. You definitely want to know what you paid per share. It helps you keep track of how much you're profiting and all that jazz. So
You want me to hit you with the numbers?
yeah, you want to hit me with the numbers?
Yeah, baby.
Go for it. You can hit the numbers.
S&P 500 sitting at 2,778.89, up 8.52 points. That's 0.31%. The Dow Jones 30 Industrial. The Dow Jones Industrial 30, whatever you like to say it, 25,315.50, up 74.09 points, 0.29%. Really flat day across the board. NASDAQ sitting at 7,645.51, up 10.44. That's 0.14%. How's the coin doing? You've been watching the coin bet more than I have.
I have been watching a lot of the coin. As we know, I've mentioned in the last episode that I am now trading the coin slash coins, and she is still sitting at 7,600, still hanging out in this 7,006,
So
7,700
you're in the
range.
game now. When's your next buy?
Dude, my next buy is at 7,470, and my next sell is at 7,740. So I'm stuck in this fucking range for literally almost 12 hours.
What do you think it's gonna go? What chart are you looking at?
Um, I'm looking at the price chart, the 15 minute.
So
I'm sorry, I'm looking at the 5 minute. Let's pull up
candle,
the 15
five
minute.
minute candle.
If you look at the 15 minute, she's actually up on a little pop for the past few hours. She was
What
trading all
time
the way
was it?
down at 75.44, so she's up about
11
$100.
a.m. There was a bunch of buys.
Yeah, she's up about 1% for that, but just flat for the past week. A little boring. Like I finally decided to jump into this thing because of the volatility, and then I get in and there's no volatility.
You just wait, baby.
How am I supposed to make a fucking
You just wait.
dollar
You
out
remember
of it?
that? You remember that metaphor I made about like the catapult? Like a bunch of
No.
buys way down the or buy orders way down the catapult, and when it hits, it just flies up.
Yeah.
This
Oh
is
yeah, because that's what happens
this
on
is
on
yeah. This is
the
what
Bitcoin.
this is what
Because
happens.
you'll see on the order book, and this is the same with stocks too. But you'll see like one price, and then you'll see a bunch of other prices that have very few shares or very few Bitcoin available at that price, and then you see another gap up. So that might be at like 7,601, and then like 7,237.
So what are you
So
trading? Are you
like,
trading Ethereum or are you trading Bitcoin?
I got both, bruh.
Any Litecoin?
Trade both. No Litecoin,
I think
but
Litecoin's cheap right now.
it doesn't matter to me because it's all not volatile. Like I can't get. I mean, with the strategy that I'm implementing, I don't really have. It hasn't moved enough from my cost basis to adjust the trade at all. So
If you could get into Bitcoin futures, would you?
no, absolutely
What?
not.
Couldn't you straddle futures like you straddle options?
You could. You could buy like going up and going
You
down,
wanted a
puts and calls.
volatile. Yeah, if you wanted to strangle something, strangle Bitcoin, man.
Yeah, but at the end you have to buy it. That's the thing. It's not like you can just let it expire. At the end, you have to purchase the Bitcoin. That's the difference in futures
Well,
between
sell
options.
sell the contract. Can't you just sell the contract?
Yeah, you could if you got a buyer.
Yeah.
Try to find. I mean, sometimes you get options where there's no fucking buyers. It's the same with futures. If it's just so far out of the money and no time left on it, you're fucked. You're like, shit. I'm gonna get 600,000 pounds of fucking orange juice concentrate delivered to my driveway.
That's insane. That's insane. I can't imagine it.
Anyway, that's a whole different ballgame. So, Nathan, today I want to talk leveraging your portfolio, and
Oh,
I've
oh, oh.
basically boiled it down to three different ways. Tell us, go ahead and briefly explain for me. You refresh my memory. What is like leveraging? Are you able to?
I mean, I guess it's like taking on like a certain like. I feel like it's like debt, almost using debt to like as like an asset.
It's a very good way to put it. It actually really is. It's not always debt. It's using a little bit. It's using extra instruments or extra risk, which is usually debt, but not always. And we'll
I
we'll
mean,
get
if
into that.
someone's loaning you money, it's technically considered like a debt.
Oh yeah, that's leveraging.
Yeah.
If you borrow money against your house, you're leveraging your house
And I guess
because
if you leverage $2,000 to your $1,000, that's a 2-to-1 leverage, right?
mhm,
And
exactly.
there's
You're,
your
you're you're
ratios.
leveraging. So basically, you're using extra instruments or risk, if you will, in order to make more money at the end of the day. And I've basically boiled it down to three simple ways. So maybe you can point out the separate ways. And this is for someone who's really trying. I'm a precursor. Like it's for someone who's really trying to take a little bit more risk to get that extra dollar. If you're into trading and you're pretty confident in what you're doing, you can use margin very carefully and it can be very lucrative, but it can also destroy you. It can destroy your portfolio. So it's something you have to be very careful with. And that's something I want to approach before we get into this. Luckily, I've never been margin called. So let's break it down. Number one, very simply, you can use leveraged funds. I know you like to do that, Nathan.
One of my favorites. I guess there's some like negative
Oh,
thing
there's
about it.
hella negatives.
What's the
But
negative about it?
well, go ahead and hit us with a leveraged fund. Tell me what it is.
Okay, so it's exactly that. They own like um, swaps of like what. So I like the indexes, the bull indexes and the bear indexes, for example. And they own like parts like funds of the market, and then they own swaps of like the opposite of the market. And I guess they're like 2-to-1 swaps, and I guess like 3-to-1 swaps. So that means like whenever the market does 3 times good, they would have or the market does good, it does 3 times that, right?
Well, I mean, if the market increases 1%, if the
And
Dow Jones
then it goes up
Industrial Average
3%.
goes up 1%, in theory,
It goes up 3%.
the triple leveraged version of the Dow Jones Industrial Average will increase 3%.
Yeah,
And vice versa. If the Dow Jones goes down 3% in a day,
all the way
and the end
down.
of, yeah, the UDOW, UDOW, the triple leveraged Dow fund will decrease in theory approximately 9 to 10%. So it's basically just the same thing, but it has increased volatility because the funds use all these exotic instruments to
From the Amazon.
exotic, exotic and dirty in order to achieve these gains. And there's two problems with it. Is one that these funds take on a lot of fees. Generally, it's much higher than what the basic ETF is because they have these swaps.
Where do you see
These
those
contracts have to
fees
renew.
in Robinhood?
You can't see them in Robinhood. You would have to go into the fund's prospectus.
So is okay. Where, when is it and where is it taken out?
I mean, you have to Google. It's different for every fund, but it comes out of the stock price. They take it directly out of the fund's value, the NAV.
Oh, so that's how they do it? They don't just like charge your account like whatever the fee
No,
is. They
no.
charge it to the whole fund.
Yeah, they charge the NAV.
They scrape it off like a top of butter, just like the top of it. This is the fee.
Exactly.
And
And they take their management fees, all that shit from that.
they just get all
So
buttery.
yeah, and then on top of that, there's often a tracking error because the ETF trades separately, like than the fund.
Yeah.
It
There's
it
a trading.
tries to mimic exactly 3%, but the actual trading offsets the tracking.
Like if there's more buyers and sellers in UDOW,
Correct.
there would be kind of like a price, kind of like a dirty price.
Exactly, because it'd be pushing up the price of the fund. So, very interesting little concept, but that is one way that you could leverage yourself. It does put you more prone to losing money for sure. It puts you more prone to more risk, but it also, more risk also equals more reward. So if you use them carefully, Nathan,
I
you'll know what
I
you're doing.
used them fine. I
Oh
I
no, I know
averaged
you use
in
them.
and made
You
exactly the.
use them fantastically. That's my point. I'm using Nathan as a perfect example.
I'm not
But
selling
anyway,
them. I'm not selling
that's
them.
that's one way. Number two is you could actually use margin on your portfolio. So your broker, all of them do. If you have a $2,000 or higher account, allow you to trade via margin, in which the broker will loan you up to 50% of the value of your portfolio in additional trading money. It's a very risky thing because they do have fees on this, and the broker can put restrictions on your accounts in order to secure them getting their money. Have you ever used margin for your portfolio yet?
I wish.
You win.
Almost. I'm almost there.
You're almost there. You're slowly
I'm
building.
almost there, baby.
Almost there, baby. Almost. Very close. Very close.
Let's have a good G summit. That's all I'm saying this weekend.
Yeah. Oh man.
Let's have a good
Hope of high
G7 summit.
shit.
Whenever that
But yeah,
is.
so basically that it puts your portfolio at risk. if you're a day trader, in order to be a successful day trader, you basically have to use margin, or you're not going to make much money. Unless you just have millions of dollars to trade or hundreds of thousands of dollars to trade, which most don't, you have to take on margin to trade. And it's very risky because you're borrowing money from a bank, a broker, and putting your portfolio and your own credit at risk. So it's something to be very, very careful with, but it's also one of those things. If you use it, it can be very lucrative. It's there for you for a reason.
Would you buy any REITs?
It's tempting. Would I buy any REITs? Not on margin. I would buy REITs in general. Yeah, like just in general.
In general, what does that mean?
Like you're like, would you buy REITs? I mean, like, okay,
yeah, of course.
Buy anything.
I mean,
it's got opportunity. I'll fucking buy it, Nathan.
I mean, like, I would go for like kind of monthly income kind of payments.
Oh, well, that brings us to our last way to leverage your portfolio, which is selling call options.
Oh.
So when you own shares by the hundred, we briefly touched on this the other day. When you own shares by the hundred, you can sell a call option, which means you sell the right for someone to buy your stock at a predetermined price in the future. So, for example, if you own 100 shares of Ford, you can sell an out-of-the-money call for, let's say, $11. So that means that you are going to sell somebody the right in 1 year. Let's bring it down. In 1 month, that if Ford stock goes above $11, they can buy it from you for $11. But the advantage to that is that for you, you're going to collect a premium on that. Let's say it's $25. So if Ford appreciates to $11, you will then sell your shares of Ford at $11 a share. So if you bought them at 10, and sell them at 11, that's instantly a $100 profit. On top of that, you take the $25 gain from your premium that you've collected, and you've made a $125 gain.
Okay.
Or on the other side, if Ford does not go to that price and it expires worthless, your contract is not hit $11, you will be able to hold onto your shares of Ford or whatever stock that you have, and you will also be able to hold on to the premium that from the contract that you sold. You collect that $25, you hold it, and you can then do what I call rinse and repeat. So it's a great way to build income, especially on dividend-paying stocks. Leveraging portfolio can add almost 10% a year just by selling the premium. Can add almost 10% a year on most stocks. It can add great ways to add cash to your account too, because you can sell weekly options, you can sell monthly, daily options, you can sell yearly options, whatever you want to do. The only problem is it requires massive amounts of capital. So as Nathan was talking, you say if you own a bunch of dividend-paying stocks, you sell a contract, you will collect that dividend, collect the premium, and if the price appreciates, you'll sell at a higher price than from what you bought. If it does not appreciate, you still collect the dividend and the premium, and then you sell contracts later for a later date. You just keep reselling the contracts until your shares get sold. It's almost a foolproof system. It's one of my favorite strategies in the absolutely fucking world. And I think it's a strategy that almost every trader needs to know how to employ. Of the three strategies that we've mentioned of leveraging your portfolio, this is definitely the safest one, because it doesn't take on any debt in order to get this extra cash. The only downside to it is that it cuts off your upside potential. It locks in a maximum amount of money that you can profit. Maximum amount. When you sell it, there's instantly max amount of money that you can profit from. If you do not sell the contracts, it puts you to exposure to all the upside if there is one. So that's my favorite of those strategies. Now you can employ all three of those. You can take on debt to buy triple leverage funds and sell the covered calls. And I fucking love it. I fucking love it.
I'm just kidding, man. All right, let's keep going.
Anyway, is there any other? I think that's all of them. Do you know of any other ideas? Do that?
Would you consider just, I don't know. No, not leveraging. I don't know.
I mean, there's taking on debt from outside people, and I definitely don't recommend that. Oh my God, especially from family members and shit. No. But I really don't know any other ways to really leverage your portfolio or your assets. A lot of people do loans for real estate, so why don't you do loans for stocks? If you trust stocks like you trust real estate, I don't see it as any different. A lot of people might say it's very reckless, it's very dangerous to use debt, and debt used properly makes money. Small loan of $1 million. Look what Donald Trump did.
God, I wish I had a small loan of $1 million.
Small loan of $1 million, which of course I had to move to Manhattan and pay back.
I would just buy UDOW contracts. Like a fucking 1,000 of them.
Thousands. By like 4,000.
You see the volume just go up in one day. What the fuck?
Anyway.
What are you watching?
Ooh.
I know what I'm watching. Do you know what you're watching?
Go. Yeah, you go first though.
Alright, I actually bought this company today. And I actually bought it kind of for like a long-term hold. And it's Dover Downs.
Very fun. We used to play that one. She's fun to play off of.
Yeah, we played around like $1, and like we'd buy her like 106, buy a bunch of shares until it goes to 108 and sell it. And now it's trading at like almost $2. And I think like with the whole gambling thing taking off,
dude, it's just getting bigger. Now that because they legalized sports betting nationwide. Thank God. I don't know why it was ever illegal. Let the market do whatever it wants. Shit existed anyway. But
I'm thinking about like it's like an easy like up and down flow DDE has.
It's DDE, huh?
Yeah.
Awesome. You know what? I'm gonna do this. I'm gonna be that guy right now. I'm not watching any stocks.
Why? I'm
watching Ethereum.
Oh my God.
I'm watching cryptocurrencies in general because there has been no volatility. It's weird. Like, it's been so stuck at this price for like 2 weeks now almost. Like, it's just been boring, snooze fest. So I think a little action is enough to cause a stir in the market. Like, basically, Bitcoin doesn't get news. You know what I'm saying? Like, there's Federal Reserve that puts out a currency report and inflation's, all this bullshit. Okay, and that's how people trade currencies. Bitcoin don't get shit. But if Bitcoin popped up $1,000 in one day, it's going to cause a stir in the market. There's going to be, there's going to be causing some volatility, 3-4% swings. I remember watching like a 6% swing during one of our episodes, like while we were podcasting. And you know what's funny? It was our volatility podcast. So I'm watching cryptos.
Well, Dow Jones futures are down.
Yeah, they all are. Yeah, watch that summit over the weekend too. That's going to be another interesting thing.
Oh wait, they're up, aren't they? Yeah, they're up. They're up small, like a little bit.
As the summit goes and debates talk and Trump meets with some of the summit leaders. Canada, China. Who else is there?
Trump sucks some of the summit leaders. You mean?
Trump's summit leader.
Trump sucks the summit leaders today.
So, anyway.
So that'll be exciting to look for.
Yeah, I don't know more. So I think that's a cast-a-sode. Alright, bro. I had fun. I like a quickie.
Do you?
Yeah, dog.